Hello, my people. It's my hope that we are well. Welcome aboard to this live session. Welcome to Finance Focus with Andrew. Of course, it is a platform where we engage in conversation that endeavor to enhance our financial literacy. And this is the first episode of Broken Finance News. And it's simply a session where I get to analyze and give insights the interesting matters that I have come across through the week that concerns our personal finances. I remember the main focus of the channel is on matters personal finances. So, majority of the things that we get to discuss should be things that endeavor to enhance our financial literacy every other day. So I have some few stories that I would like to share. I would like to give my insights, and I would also really appreciate if I get to to get other people's insights, so that I also get to learn from you people, because no one knows everything. So I would also like to get insights from you people once I hear out my stories. I would like to hear insights from you. So if you have some contribution on the stories that I'll get to share, feel free to give your insights. And a brief foundation of whatever that we are about to discuss. I have said that the focus of the channel is matters that concerns your personal finances. And personal finances is everything that touches on your money, from the moment you earn from the moment you earn it, to the moment you think of budgeting it, to the moment you think about how to spend it, to the moment you think about what percentage you will save, what percentage you get to spend, and everything. So that is basically what personal finances is all about, and that is what we are here to discuss. So anytime that I come across an interesting story that touches on your personal finance, I will always ensure to bring it here so that we get to hear some insights, and I'm sure the insights will be educative and we get to get some lessons from them. And now let's go to my first story of the session. And it's a very common thing. It is not the first time that I'm coming across it on the social media. You can be sure that my social media are full of personal finances stories, because that is what I'm interested in, and so that is what the internet brings to me. And one of the things that I'm always interested to get people's views, whenever I come across it in the social media, is money market funds. A money market fund is one of the most common unit trust, even by the CMA report for the first quarter of 2025. Money market fund is one of the most common unit trust. So many people know about money market funds, but again, many people think that money market fund is just a get rich quick scam, and that's where they get the idea wrong about money market fund, because that is not right. So anytime I come across a post on social media about money market fund, I will always go to the comment section, because that is where we get entertained by getting to hear people's views about money market fund. And I came across this post. Someone had said, I earned Kenya shillings 1,100 interest after tax from my 277 savings in a money market fund in 15 days. So this guy was seeking to validate whether the money market fund is worth, and he said that he earned 1,100 from money market fund where he had deposited 272,000 and in 15 days. And so the first thing that we need to do in that element is to calculate the interest rate so that we can tell whether this guy is talking the truth. Whatever the guy is saying, is it a possibility or is just hot air? So of course I took the numbers. If you take 1,100, that is for 15 days. I will just assume that for the month we double that. So the double was coming to around 2,200. So if you do that monthly interest rate, it is coming to around 0.8088%. So the annual rate will end up being 9.705%, and that is after tax. And for the first step, we give a tick. That is true. This is a possibility. You will earn 1,100 after tax for a money market fund where you have deposited 272,000. So 9.705 is very normal in our current money market fund that is in the Kenyan system. So that is 9.705% is the rate at which this guy earned interest. Now the question is this money market fund worth to this guy, or this guy should find another place and transfer these funds? Of course, the main content in our social medias is in the comment section. Even the individual who posted does not have read the content. It is in the comment section where you get the real content. And so directly I dived into the social media comments, and this is what I got. The first thing that I should appreciate it is that quite a number of people are aware of what are money market funds, what is the purpose of a money market fund, and how money market fund works. Because anyone that I found saying that this is normal for a money market fund, I gave them a tick, because these are people who understand what are money market funds, how they are built, what are their purpose, and that was a tick for them. And I was amazed. I was impressed by the level of financial literacy that is going on in our country, because these people understand that money market fund is not that investment that will give you high returns in a short while. Money market fund is that pocket where you put your emergency funds. Now, instead of putting your emergency fund into a bank where you earn zero interest, and most probably they charge you monthly fees, monthly water, so your money is eaten by inflation and is also eaten by bank charges. A money market fund is a good alternative for that, your emergency fund. And professionals or experts in personal finances recommend that the emergency fund should cover at least between 3 to 6 months of your monthly expenditure. So what do we mean? If you spend around 20,000 in a month, that is paying your basics. That is, with 20,000 you have paid your rent, you have paid your food, you have paid your transport, such. 6 times that amount. So if you spend 20,000, your money market fund should at least have 120,000, because if anything goes wrong, you are sure that you'll be able to survive for about 3 to 6 months. And 3 to 6 months is considered to be a long time, and you will have figured out what to do next. So I was amazed by that positivity that some people get to understand how money market fund operates, and their low risk, low return investment. So getting 1,100 for 15 days with your 272,000, it is normal, and that is it. That is how money market fund works. And remember, if this 272,000 was in a bank, for the 15 days it would have remained 272,000. It would not have turned even to 273,000 or 272 and one shilling, it would still be 272,000. So those people understand that money market fund is just an alternative to your bank account for emergency fund. Now, but I found someone else saying, run away. Now, my question is, why do you get to run away from a money market fund? Because you are given an interest of 9.7%. Now, when joining, what figure did you expect? What figure did you have in your mind? You cannot run away from a money market fund because they gave you the interest that you expected. Uh, the current rates that we have in the market are around that figure, 9.7%. So telling someone to run away, I don't know, you are telling them to run away to where? I don't know whether you are advising them to run away and get back to the bank. I don't know, you are telling them to run away to do what? So uh, this guy should know that he has. I expect that this is a pocket where he is placing these funds either for his emergency or as he thinks of what other investments to make with this money. So he should not run away from the money market fund, because that is if the money market fund is serving his purpose, that is storing his emergency fund or parking his money before he decides what to do with it, this guy has no need to run away. And the other comments, quite a number of them, of course, they will always talk about business. Someone will be there challenging you to start a business. And I saw quite a number of people saying about starting a business. And I think one of the social media users, one of the platform users got irritated and asked that everyone is talking about starting a business, but you are not mentioning and giving us practical ideas of businesses that we should start with this money. So he was frustrated and said that instead of just coming and dropping the name business here, you should come with practical ideas of businesses that you should start. So that is a good point. Of course, a business is expected to do better than a money market fund, but I expect a businessman to have a money market fund where he stores his emergency funds. So you cannot take your emergency funds and go starting a business. So emergency funds are emergency funds, and they should be in a money market fund. So if this guy 272,000 are part of his emergency fund, don't advise them to go and start a business with his emergency fund, because kikimramba hautamsaidia. And the other comment that caught my attention, this guy at least mentioned a specific business that this person would start, and he said that money can do better if you buy 2 motorbikes. Very brilliant idea. This guy had a very good idea. He's telling this person, instead of putting your 272,000 in a money market fund, just go and buy 2 motorbikes, and your life will never be the same again. But what is after? What goes beyond that statement of being told to go and buy 2 motorbikes? Does this person who is holding their money in a money market fund know anything about money market? Does he know anything about motorbikes? Has he interacted with someone who owns a motorbike, who owns a motorbike, and gets to understand what plays beyond what we see with our naked eyes in the motorbike sector? How much does that guy earn on a daily basis? After buying these 2 motorbikes, how will he operate them? How will they operate? Who will operate them? How will he coordinate? How will he ensure that he gets what is his? Now that he cannot be driving the 2 motorbikes, and I'm assuming that he is doing something else. So the insight from this guy is that guy should buy 2 motorbikes, and of course give them out, and get to receive some money at the end of the day or at the end of the week. But those guys in boda sector can give notice before this guy goes and withdraws that money from the money market fund and goes to buy the 2 motorbikes that he is being advised to buy. He should go and do a thorough research on how the boda boda sector operates, how much he should expect to get in a day, how much he should expect to use maybe in a week or a month for repairs, for services. He needs to get all these figures right. Then he will be able to make a decision whether to stick with the money market fund or to take the money and go and withdraw and buy 2 motorbikes and give them to some 2 young men. Then the fate of him getting the money will be on these 2 gentlemen that he gets to dash these motorcycles. Yeah, he might be amazed. The idea of getting your money the idea of getting your money from a money market fund and going to buy 2 motorbikes might be so amazing on paper on the social media page, but once you buy them, you might realize that you getting your money, it all depends on the masses of these 2 guys that you have given the bikes. They might bring you stories every day. Oh, leo hakukuwa na kazi. Oh, leo sijui pikipiki ilifanya, hata nataka unipee pesa ya repair, because you know, if you have ever operated motorbikes, you need to understand that repairs are catered for by the owner of the bike. So that guy might bring you 400 in 5 days. That is a week. That is 2,000. But on Saturday, they tell you that the bike is faulty, and you need to cater for the repair charges, and you end up spending even more than that 2,000. So I wouldn't tell this guy not to withdraw this 272,000 in his money market fund and go and buy 2 motorbikes. But before he does that, he needs to do a thorough research on the motorbike sector. Don't go and buy motorbikes because someone just gave a comment on a post on social media. Get to the ground, get to sit with someone who has operated motorbikes for a long time. Get to understand everything about the field, and then you'll be able to make a decision. Then someone else said that a money market fund is for emergency purposes. This is someone who understands what are money market funds, why they are there, and how they operate. So them saying that money market fund are meant to store your emergency fund, I agree 100%, and I repeat, they are alternative to your bank account. Instead of putting your money in a bank account where you earn 0 interest, it is better if you get to earn that 9% interest instead of 0 interest. Another social media user brought the factor of inflation, and they said that as far as the interest is higher than the inflation rate, then you are okay. Another key purpose of money market fund is guarding your money against inflation. And the report from the Central Bank of Kenya, the Kenyan economy inflation for the month of May 2025 was 3.8%, and it means that any investment that you make should give you an interest that is higher than 3.8%. So if your investment is not giving you above that, your money is still being taken away by the unseen animal we call inflation. So the idea of this guy is that as far as the interest rate was above 3.8%, it is okay. The money market fund is playing its purpose of protecting your money against inflation. And we have seen that this fund was giving this guy an interest of 9.705%, which is way above, which is 3 times above, or okay, it is way above the inflation rate, which was 3.8%. So this money market fund was serving the purpose of protecting this money against inflation. So now, as we conclude this first session on the money market fund and the public view of it, my conclusion is that you really need to do a thorough research about every other investment vehicle that you hear in this Kenyan economy. Every financial asset or every financial vehicle, investment vehicle, has its own structure, has its own properties or characteristics, and has its own purpose that it serves. Now, you cannot go saving in a money market fund with an intention of getting a loan at the end of the day. Yes, you will be in the right place, but for the wrong purpose, because the money in your money market fund will never help you secure a loan. But if you know that your intention at the end of the day is getting a loan, you should be in a circle. And the other thing, you cannot put your money in a money market fund, the money that you expect to use to operate your daily operation, to pay for the daily operations of your business. Like every other day you are there withdrawing your money from your money market fund. That money could do better in a bank account. So you need to understand the different features of these investment vehicles. May it be the bank, may it be the circle, may it be the money market fund, may it be the treasury bills, may it be the treasury bonds, may it be shares. Each of them, get to study each of them, understand their properties, their different properties, and now combine that with the purpose that you have in mind and choose the best investment for you. Otherwise, there is no investment that will work best for everyone, and the best person that can choose an investment vehicle for you is yourself, simply because you know yourself the best. So don't go making decision out of things that you see on the social media when it comes to investment. What you need to do is you need to start to sit down with yourself, with your life, get to understand what you want, what is your intention, and at the end of the day, ensure that you choose the best for yourself. Now, that is it. I would also like to hear your insights. Do you believe it is worth having a money market fund, or you are the person that says that all your money should be in a business, that a money market fund is just a waste of time? So I would really appreciate to hear your thoughts about it. And now, on to our next story. Now, it is quite sad. It is very sad. It is a very sad state of affairs. But for some reasons, we have normalized it in our country, which is not good, because it is something to do with corruption. Corruption happens to be a daily dose in Kenya, and it is about an organization that has been on the headlines every other time for the wrong reasons. An organization that I'm not sure it is still serving the purpose for which it was created. And it is an organization that majorly affects those people who are in formal employment. And when I say that, of course, you know, I'm talking about NSSF. NSSF has been on the internet for the wrong news many of the times, because we always hear some funny stories about NSSF, and this is an organization that is expected to collect and invest contribution from those people who are working, from the working population, invest that fund wisely, so that when they get to retire, they will have a good pension to live on. You know, it is funny that, or not funny, it is nature that the moment you stop working, if God gives you some good years in this world, it will get to a point where you'll not be actively working. You cannot be able to work, but your needs will not stop at that point, and that is why you should save for those years while you are working. That is why you should start thinking about your retirement when you are still in your 20s, when you are still in your 30s, or when you are still in your 40s. So, and that is why someone came up with this organization called NSSF, that is the National Social Security Fund, I think so, to collect funds from those people who are working, invest that money, and get to pay that money back once these people get to retire. But my big question is this organization playing it mandate the way it should? These funny stories we get to hear every other time about the losses they are making, about the corruption that is going on in that organization. It only means that the fund that was collected is being drained each and every other day, and it means that your pension will not be worth whenever you get, at that time you get to the retirement time. And the latest news from NSSF is from the Auditor General. So the Auditor General Nancy Kadhogo released a report on the National Security Fund NSSF for the year ending June 30th, 2024. So the report says Kadhogo flagged financial improprieties that saw the scheme lose Kenya shillings 16 billion from members' savings. So the 16 billion that was lost by NSSF, it is not salaries from the workers who work in NSSF. It is not salary for the bosses in NSSF. It is clear that the 16 billion is from the members' savings. So that is sad, because this is an organization that we expect that they should collect some funds from you. It is not donations from the government. It is the money, it is hard money that you have worked for, and it is deducted at the end of the month. But someone collects it, but instead of investing it and giving you hope, instead of giving you good news that the return from NSSF funds this year was 20%, so that you can have hope for a good retirement. The news that the Auditor General in Kenya is bringing you is that the organization has been framed with losing 16 billion from members' savings. That is a very sad state of affairs. So, how did NSSF get to lose 16 billion of members' savings? Let's get some few details on how this happened. And number one, so the money was lost through different avenues, which include ghost taxes, bad investment, idle assets, costly travel, and price renovations. Now let's try to dig deeper. So maybe there is no reason to be mad about it. Maybe it was just a small mistake. Now this is what the Auditor General says. Kadhogo revealed that over 904 million in taxes was wrongly paid to KRA with no refund or interest earned. Now, when in this country everyone is complaining about taxes, we saw a year ago, we saw the Gen Z going to the streets fighting the Finance Bill 2024, and the main thing was the number of taxes that were being brought by that bill. So when everyone else is sad about the high taxes that we are paying in the country, NSSF are willing to pay surplus taxes. with your money. Is it that amazing? Like, as you complain about the taxes, the people that are interested to invest your pension are willing to give the government more than what they are asked for. So NSSF paid, erroneously paid KRA 904 million. Like, walienda pale Times Tower wakawapigia, wakanok pale Times Tower and they tell these guys, I think there are some taxes that we should remit to you, and that is how they ended up remitting 904 million to KRA erroneously. That is madness. So someone somewhere is playing with your pension. You see that money that is deducted every month on your payslip. Someone is not serious with it. It is a sad state of affairs, but it is better you be aware of it, so that maybe you can start planning your retirement with other means, because someone who has been given the mandate to collect and invest your retirement funds is really joking with it. Now, the other one, listen to this very carefully. The Auditor General said the scheme also spent Kenya shillings 115 million to buy land in Upper Hill, Nairobi, whose title was later revoked since it was public land. Tell me why an entire organization like NSSF are not able to conduct due diligence when buying land. I would expect that every decision that is made by NSSF should be more superior than a decision made by an individual person, because I don't expect one person to be making decision in the entire fund. How does an entire organization like NSSF goes buying land, then later that title is revoked from the fact that that was a public land? If individual Kenyans who are buying land take the initiative of doing due diligence so that they don't get to lose their money, how does an entire organization like NSSF fail to do due diligence and end up buying a public land? So I just want you to understand that the person who is in charge of your retirement fund is joking with it, and they just need to get serious about it. The other point where they lost money, the fund was also found to have 5 idle and unused properties in Nairobi CBD worth 4 billion. So you see, one of the advantage with NSSF, it is the time frame that they have on their investment. If you get to look around, I don't know whether you have ever asked yourself why even majority of the banks do not have their own buildings. Number one reason is the time frame of the investment that they can make. Banks cannot have so much resources placed on long-term investments such as buildings, and that is why you find that even majority of their branches and even their head offices are on rented spaces, because they cannot use a lot of money for these long-term projects. But when it comes to insurance companies and retirement benefits organization, they have a wide range of time. They can invest in these long-term projects. That's why you find that you will hear of buildings like the CBK pension towers. That of course is a pension scheme investment. They can comfortably invest in a building because they have a long time before that money is required. So someone has just started contributing to pension at the age of 25, and they are expected to retire at 50. Now, this guy has 25 years, so this scheme has that person's money for 25 years before this guy can start asking for benefits. So they have a long span, so they can take the advantage of building major buildings. Think of buildings like the UAP Old Mutual in Upper Hill. Think about Britam Towers. That is the advantage that the insurance companies have. They can invest in these long-term projects. Now, NSSF is in that class, so I expect them to have quite a number of buildings or quite a number of assets. But NSSF happens to have buildings in the CBD that are unutilized. Why did they put them up in the first place? Is it that there is no demand for those buildings, or what is it? But I don't expect NSSF to have idle assets in the CBD. If it was somewhere else, we could say that maybe it is just an investment that went wrong. But in the CBD, having 5 buildings that are idle, surely it does not make some sense there. Maybe there's some mismanagement that is going on somewhere. Somewhere else that NSSF lost money. NSSF also invested in 2 companies whose value dropped by 17.6%, costing members over Kenya shillings 27 billion. So some a part of your retirement benefit or your retirement funds was lost in in some 2 companies that got losses of 17.6%. Their value dropped by 17.6%, costing you 27 billion. So 27 billion of your money was lost. And anytime you hear a loss happening in NSSF, you should be deducting in the math from the money that you expect in the future. So maybe an investment can go wrong, but again, I expect NSSF to have the best investment advisors in this country, so that we ensure that pensioners' money is optimally invested. Investments in the NSSF should not be a trial and error. It should be a well thought process by professionals, not people who have no idea what investing is. So the report further indicated that NSSF Kenya shillings 38 million in a loss-making bank's shares. So they bought shares in a bank that is making losses. I will repeat, I don't expect investment in NSSF to be a trial and error. I expect it to be done or executed by professionals with the highest experience that might exist in this country. The scheme also spent Kenya shillings 12 billion on government premium bonds, which were later sold at Kenya shillings 272 million loss. So another 272 million is lost. So do the math and subtract the money from your future money. And don't be surprised if you retire and NSSF tells you that there is no money. So I repeat again, investment decisions in NSSF, I expect them to be made by people who know what they are doing in the investment field. It shouldn't be a trial and error. Now, NSSF also lost money via expenditures. It is a government organization, and this is very common. Let's see how they spent your money. So the report further showed that NSSF spent 317 million for travel, meetings, and conferences, with 11 million spent on conferences again. I don't know whether they are traveling to correct your pension, which is automatically deducted from your payslip. But if you see the Auditor General highlighting it in her report, it is not normal. That's ambiguous. The funds used 55 million on vehicle operations, including 3.2 million on fuel. NSSF budgeted 411 million for renovations, where 14 million was spent via questionable procurement. This is a crime scene. The scheme spent 36 million on property, plant and equipment, with 2.1 million used to buy a single reception desk. Yeah? With 2.1 million used to buy a single reception desk. You see what these guys are doing with your pension, with your pension contributions. So 2.1 million was used to buy a single reception desk. Quite interesting. But who are we supposed to ask for accountability for this organization? So the report continues to say NSSF used 69 million to pay trustees emoluments out of 6.9 billion spent on administration costs during the same period under review. The Auditor General conclude to say that we conclude by saying, meanwhile, the scheme sought to invest in 170 billion Nairobi Mau Summit Road during project. Now, a lot have been said about NSSF, and on this road project, when I heard this story, I only had one question in mind. After NSSF invests in that road project, after they contribute money to pay for the Nairobi Mau Summit Road during, how will the fund get the pensioners' monies back? How will the fund bring the money back to the organization and remit the same to the beneficiaries, who are the pensioners? So it should not be business as usual. And again, we have seen, we have had the Kiharu Member of Parliament, Dede Nyoro, quite a number of times talking about this organization called NSSF, saying that he initially thought that the money we contribute as pension is stored somewhere and invested, so that when you retire, the money is deducted and you are given your share. But he was surprised to understand that that is not the case in Kenya. NSSF or your contribution are used to cater for recurrent expenditures in the country. That's crazy. So this money should entirely be invested and get some good returns, so that, you see, if I was deducted some money when I was 25, that money should have gained a lot of interest by the time I'm correcting it at 50 years. So I should be taking 3 or 4 times the amount that I contributed. But with this kind of organization, that is not going to happen, and that is why we will find that in our country, being a pensioner is one of the saddest state of affairs. But you have the information. You have the information of whoever that has been given the mandate to invest your retirement benefits, what he is doing with it. You are not safe, so you should start organizing yourself by your other means. Don't say that NSSF will take care of you when you get old. They are just joking with your money. Again, I think NSSF was a good project in the era when we did not have a lot of people with investment information. Right now, in the year of the Lord 2025, I think people are more informed than before, and everyone should be given their money, whether they decide to consume it or invest it. They will organize for their own retirement in future, instead of giving money to an organization that is just playing games with it. I believe it will be better if you are given your money right now, then you make a decision on what to do with the money. If you decide to consume the money, it is up to you. Then you know what to do once you get to the retirement age, because your money is still not safe with NSSF. Your money might be earning a good 0% return with NSSF, It would be better in a money market fund getting a 9%. So if a member of parliament can get this and take the motion to parliament, for the idea that NSSF or pension contribution should not be compulsory for Kenyan workers, we can do better than this. We are in the era of information where people are informed about the investment avenues that we have, and people can be able to invest the money on their own behalf. So we should do something about it, and if possible scrap this whole organization. So kila mtu apatiwe pesa yake, akitaka kukula mandazi akule, then tukifika uzeeni sisi tutajipanga, hatuna shida. But it's a sad state of affairs. Get to think about it. Now, the other point on my broken finance news today, it's a brief touch on inflation. The Central Bank of Kenya gives a figure on inflation every other month. At the end of every month, they give a figure on the inflation rate for that particular month. For May 2025, it happens to be at 3.8%. That is a drop from the month of March, where it was 4.1%. And what inflation means is inflation from back then, when we were doing business studies in high school, inflation was defined to be the continuous increase in prices of goods and services. So it means that the goods and services in Kenya increased at a rate of 3.8% in the month of May. And what it means is that the money that you have depreciated by that same figure, because its purchasing power reduced by that rate. That's why if you are to be asked, if someone gives you two options, I either give you 1,000 bob in the month of January, or I get to give you 1,000 bob come December, you better choose January, because that 1,000 bob will be more valuable in January than it will be in December. That is courtesy of inflation. And that's where the time value of money comes in. So the only thing that you should note about inflation, if you have some money somewhere, parked somewhere, you should ensure that you get a return that is higher than the inflation rate, so that your money does not get to lose value. So if the investment that you had made in the month of May 2025 did not give you a return higher than 3.8%, you are not making good investment decisions, because your money is still being eaten by inflation. And other than any other benefit that you should get from investing, at least you should be able to protect your money from inflation. So ensure to be up to date with the inflation rate, and also ensure that whenever you make investments, you are getting a return that is better than the inflation rate. Now, you need to understand that when thinking about investment, sometimes it is good to swallow the bitter truth and take the real investment figure as it is. That is, if you are told that you will be given a return of 10%, think about any deductions that you need to make from that percentage. And number one should be taxes, because that is not negotiable. The government needs to correct its tax from that interest that you get to earn. And the other one is inflation. So if you are being given 10% after tax, you should also consider putting in the factor of inflation, that is the 3.8%, and you get to understand that now your real return from that investment is 6.2%. But my main point from this point is ensure that you always invest at investment that gives you a return that is higher than the inflation rate. Otherwise, if you get to invest in anything below that, you will only be undoing yourself. Now, we are almost concluding this session. I think it took longer than I expected, but we have one more thing to touch on before we conclude, which I believe is important. I came across another post that read this. The silent document that is breaking families in Kenya. So the silent document that is breaking families in Kenya. Now, if you get to hear that statement, what would you think is that single document that is killing families in Kenya? I was interested, as you are, to know what kind of document that might be killing families in Kenya. And after reading the document, I came to realize it's all about the retirement benefits. Who are the rightful owner of your retirement benefits? Now, let's give a foundation of this story before we go to so that we can be able to understand the point better. The moment you get employed, maybe you might be so young. Let me take a young man. A young man who has just been employed in his 20s, let's say 25 years. This guy is employed. He has no wife. He has no kids at that point. And in the onboarding process at employment, it is at that very point that he nominates beneficiary for his retirement benefits in case he passes away. And now this guy is very young and he is not married. He has no kids. So the first people who comes to his mind when he is filling that form, probably it is his parents or his siblings. So those are the people that he indicates as the beneficiary to his retirement benefits or to his benefits that might be there. Now this guy starts working and he starts being deducted the money from the first month in employment. And the money is deducted and the guy continues working. At some point he gets married. Even at some point he gets children. So his life is updating, but the forms he filled at the entry point are not being updated. The beneficiary for his pension or his benefits is still his mother, his father, his brother, or even his sister. Then the unfortunate happens and this guy passes away. And he is buried and put somewhere where he cannot be able to speak again on anything. He cannot be able to give guidelines from 6 down the crowd. And of course, his wife will go for the succession plan because, of course, he knew he was in a formal employment, and she expects some benefits. But on going there, she discovers that she is not, or none of his kids is the beneficiary to the guy's benefits, because the names that appear there are those old names that were written 20 years ago, 30 years ago, by the young man who was employed at the age of 25. His siblings are still the beneficiaries of his benefits. And of course, a fight comes in there, because not many of the families can be able to have a discussion and agree that even if we appear on papers, we are not the rightful beneficiary owners, because this guy had a wife, this guy had children, and maybe these funds should the main thing that these funds should do, it's to take care of these guys' children. But what is written on the paper is different, and that is how quite a number of families get to break, because that's a dispute that gets to kick in immediately. As soon as that happens, that are disputes that kicks in between the marehemu's children, the marehemu's wife, and the marehemu's family, that is the mother, father, brother, sisters. So the lesson from this post was, anytime you feel that you need to update the beneficiary of your benefits, if you are not there to speak for yourself, or as your life progresses, make sure that you make all the necessary all the necessary updates where needed. If you have that insurance plan that you took when you were very young and beneficiary was your brother, but right now you are married, you have your children, if you feel the need to change that, so that if you are not there, you would like that money to assist your children, ensure that you change that on the papers. Don't change it in your mind. In your mind, you might change it and say that now, if I'm not there, this money will help these young kids. But on the paper, you don't get to change. Once you are gone, you are not there to speak on yourself. It is the documents that will speak. So whenever you feel that there are changes that you need to do on your papers, on the beneficiary in the different schemes that you might be in, it might be a retirement benefit, it might be an insurance plan, ensure that you don't only change the beneficiaries in your mind, ensure also to change the beneficiaries on paper. I hope that's clear, so that you avoid these disputes that will come when you are not there to speak for yourself. So that is it. That is the lesson that we take from that. And the last thing that caught my mind, it is something simple. It is something obvious. And someone had posted saying, spending your money to show how much you have is the fastest way to being broke. We spend money for so many reasons, but one of the worst reasons that you can spend money for, it's to simply prove a point. As much as you live in this world, get to ask yourself a question: why you are spending money? Is it to benefit yourself, or is it to prove a point? And try not to spend money for the sole purpose of proving a point. At the end of the day, it is you that will be left struggling, and take it that nobody cares. Many people are so much into their problems, into their businesses, and they don't even care about what you do with your money. So if you decide to take a loan and go and buy a car, I will come and will say, nice car. So the only statement that will give you is nice car and will clap for you. But in the background, you are the same person, you are the only person who will be left struggling to repay that loan that you took, so that you can impress us. And the only thing we could offer was one statement: nice car. So get to think of the reasons that make you to spend money, and never spend money to impress people. Nobody cares. So that is it for this week, broken finance news. I hope they were broken enough. This was just the first session. This was just an introduction. I believe I will be able to bring better updates and better insights in the future. So just keep tuned. Tell a friend to tell a friend, so that this financial literacy gospel can go as far as it can. Because personal finance is something that affects us on a daily basis. So we really need to talk about it. So thank you for tuning in. Thank you for listening to me. Be encouraged to give your insights, and see you in the next session. Thank you.